Hey everyone, so I thought it'd be a good time to create a video where we walk through the time frames starting from the top, the primary trend, down to the smaller time frames, just to give a general idea of where we stand in the bull market cycle, why the current price action was to be expected, and what to expect in the distant future, as well as what would be some technical indications that we could be transitioning back into a short-term uptrend. So in order for me to do this, you just need to have a general idea of the stage analysis method, which many of you do, but for those that don't, I just want to give a brief overview of what stage analysis is. So this is basically a way to measure the cycles of the market. It's primarily used on the larger time frames, that being the weekly, to identify the primary trend. And the reason we want to know what the primary trend is to get us in line with that dominant trend, because whatever the trend is, you don't want to be trading against it. You want to be trading with it, because that's where the probabilities are going to lie statistically. And as a result, it wouldn't make sense to do otherwise. So with that said, there's 4 different stages. You have stage 1, which is known as the accumulation stage. And that's where you're going to have institutions, really accumulating large positions in preparation for stage 2, which is a stage 2 uptrend. It's when you're going to, it's basically the bull market that we're in as of right now. And then you're going to have stage 3, which is the topping area. It's also known as the distribution phase, which is where institutions are going to do just the opposite of what they were doing in stage 1. They're going to be unloading all of their positions onto the public. At this point in time, it's generally where people are going to be most euphoric. They're going to think that stocks are only going to keep going higher. So they really let their guard down, and they are buying stocks at very expensive prices. And as a result, they get caught in the next stage, which is a stage 4 downtrend. That would be a bear market like we saw in 2021, 2022, before it just repeats over and over and over again. So it's a cycle that has played out since the inception of the stock market of charts. You're using the 30-week moving average to get different technical, to get an idea of where we are in the stages. And you're going to look at different technical characteristics to help identify what stages we're in. I won't get into that right now, but this is primarily going to be used for the weekly time frame. However, I have developed a method that allows me to use it on the 195-minute time frame, which is simply the daily cut in half. And I'll actually use that to help me identify where we are on the smaller term time frames, which is what, as a swing trader, I'm primarily going to be focused on trading, trying to catch those 3 to 5 day momentum bursts. And I'll make more sense of that shortly, but let's first just look at the weekly chart here. Try to ignore this text. I don't want to confuse anyone. Just look at it as being noise, but you could see that this green line, I'll get rid of this right now. This green line, that's that 30 week moving average, right? So you see how, it's guiding us through the stages. It's doing the same thing right here. So this is back in 2021. We had that stage 3 top. We then went into stage 4, and then we had our stage 1 bottom down in early 2023, and then have since moved into stage 2, a stage 2 uptrend. So we went through the motions, right? And now we're currently right here. Generally, a stage 2 uptrend is going to have at least 3 legs. However, not in all situations, but on average they do. And throughout that primary trend, you're going to have 2 corrections. These are counter trend movements, right? So you have your first leg up, your counter trend movement, your second leg up, and then we're in that current counter trend movement. So generally speaking, they're going to last anywhere from 2 to 4 months. Sometimes they'll last longer. 5 months was here, but it looks like in general 5, 4. They're not going to be anything too crazy long, but there is instances where you got that 10-month, 8-month, 4-month. You could say the average is about 4 months. So just with that, just alpha back testing previous cycles, it would tell us that we're fairly early on into this correction based off of the statistical average. Okay, so we're about 2 months in. So one could expect us to be in this correction for another month or two if we're to stay, based on the average of the previous bull markets. But I don't want to get too into that right now. All I'm trying to establish right now is that we're currently we're in correction territory, or we could be entering correction territory. We don't know until price pulls back 10% or more off of the 52-week high. But as covered in the previous newsletter, there's a good chance we're going to be moving into that correction territory and have that deeper pullback at the very least. So what we just established right now, looking at the weekly time frame, is that the primary trend is currently an uptrend. We've had 2 legs up, and based off of the average of 3 legs, we would expect to have one more correction and then another third leg up at the very least. Doesn't mean it's going to happen, but statistically the probabilities are quite high that does play out. We'll have to wait and see. But right now we're currently in that corrective phase, more than likely. Okay, so now that we've established that, we could go to the daily and we could see that we've lost the short-term moving averages and we've lost the 50 moving average as of the last couple of days. So what did we see play out during the first after the first leg up? What was the price characteristics that occurred during the transition into the first market correction that we saw just on the weekly? We lost the short-term moving averages. That's how it began. We also lost that uptrend, and then following that we lost the 50 moving average. So right when you lose that 50 moving average, it's telling you the market is under extreme pressure, because the 50 moving average is your intermediate term moving average. It's your institutional moving average. It's telling you that when price is below the 50, it's telling you that institutions are not supporting that particular stock. If it's an index, it's not obviously a stock, it's an ETF. It's telling you that the stocks that make up that index, which is basically an ETF is a basket of stocks, they're cumulatively below the 50 moving average. So it's telling you that sector, industry, whatever it is currently under pressure. And that's the first major sign or the first major signal to me that we're moving into harsher market conditions. And if you go back, I'm not going to bore you guys, and look statistically, it's what you're going to see occur ahead of every major market correction. So here we lost it. Obviously, we didn't go much lower, but we did move sideways for over 10 weeks, which is also categorized as being a correction. That would be a correction through time versus price, but let's not get into that right now. Same thing here. You lost the 50, consolidated for several weeks. You get the idea there, right? So when you lose that 50, it's the first sign that we're going to be going through a larger we're going to likely to go through a correction of some sort, and we just lost it. Okay, so that's where my mindset is right now, and I'm not really expecting any kind of major move to the upside for several weeks at the very least. Now we could drill it down even more. So we were tracking this support level, this 432 area, on the newsletter and in Discord for quite some time now, and we knew that if we lost that level, we'd be moving it from a short-term uptrend to a short-term downtrend. So we have that now. What's cool about stage analysis is you could use the stages on really any time frame. However, I found that the only other one that really can provide some predictability and give signals that are actually reliable is the 195 minute, which is once again the daily cut in half. So just like on the weekly chart, stage analysis has 4 stages. It's the same deal on the 195 minute time frame. So we can get a general idea of where we are relative to the short-term trend. So let me remember where this is. Is it here? Yes, it is. Okay, so this was that previous market correction. So the weekly, it was right here, and then the daily, right? You got it right here, the first correction, and then on the 195 minute, once again, it's right here. So what we're gonna do is we're gonna look at the previous correction, what was occurring throughout the transition phase right around here, and then we're going to compare it to where we are right now to try and get a general idea of what to expect in the coming weeks. Okay, so starting from the top, I'm just going to pretend we're right back to August of last year during the summer months. What occurred? What's the first sign that we're likely transitioning from an uptrend into some sort of downtrend? It would be when price tests in the case of an uptrend, the 30 moving average. It will generally undercut it in some sort of fashion, and then it's gonna either bounce and continue higher, like here where we undercut it and we bounced and continued higher, or it's gonna bounce and then it's gonna make a lower low, which would then put us from an uptrend into a downtrend. And if we were to use a stage analysis method, it would be we would go from a stage 2 uptrend. This would have then been stage 3 and then stage 4. This is very technically heavy, so I'll do my best to make sense of it. I'll at least give a conclusion as to what to expect as we end this recording. But we had our undercut of the 30 moving average. We then pushed higher. We weren't able to make new highs, and then we made a new low. So we broke into stage 4. So a stage 4 downtrend. Now, since we're using a smaller time frame, you're gonna go through the stages much quicker, right? Sometimes you'll be in them for a prolonged period of time in a powerful trend, but when you're in a choppier type of market, you're gonna get you're gonna go through the cycle, the motions quite frequently. So we went from stage 4 into stage 3 into stage 4. We then had our first sign that we were potentially bottoming, and that occurred when price broke above the 30 moving average and then pulled back and then made a higher high, right? So boom, 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 higher high. And at the time that the breakout, you could see the moving average start to curl higher. That didn't go very far. We then moved sideways. We had our first undercut, and then we broke below it several weeks later, moving us right back into stage 4. So you could see how quick we went from stage 3 to stage 4, to stage 1, to stage 2, to stage 3, to stage 4, and we repeat over and over. So the main takeaway here is just how to, assess the potential or when we're likely transitioning, which is when you get the first test. In the case of a stage 2 uptrend, so when you get the first undercut or touch of that 30 moving average, and then are unable to make a higher high and then break lower. And then in the case of a stage 4 downtrend, it's when you make the first point of contact with the declining or flat 30 moving average, are unable to make new lows and make a higher high. So what I want us to pull out of this is, what to look for in the coming days or weeks. And that would be, we want to see how we react at the first point of contact with that 30 moving average. So it's currently moving lower. We're now in a stage 4 downtrend, right? Because we had, you can see, we were moving higher. We broke below it, so that became the level of interest. We tried to make a higher high. We actually did make a higher high. Broke lower, tried to take out that level, but we were unable to. And then once again, barely made a higher high. It was obviously a chop fest. You guys remember it vividly, I would imagine. And then we finally took out that level. So we are basically right now, we are where we were back at the beginning of the correction in early August. What transpired was a multi-month correction where although we lost that 50 moving average back on the 11th of August, it was the precursor of a more harsh market environment and a deeper correction to come that really took over, 2 months to fully come into fruition. So that's why I'm saying I can't tell you now that since we lost the 50 moving average, we're just going to correct down 10%. But I can tell you that historically, when you lose the 50 moving average in a meaningful way, just really in general, especially after a large move up, the likelihood you're going to see a deep correction of sort is high. Okay, so what we would be expecting now as the first sign that we are potentially putting in a short-term bottom and going to try to push higher would be price making contact with that or that 30 moving average. Maybe it does something, let's say it does this, comes up, this, comes in contact with it, maybe breaks above it briefly, then pulls back in, and then makes a higher high. When you make that higher high, it would look something like this. We'd have a little base, right? It would be a break over that higher high that would then put us from that stage 4 into stage. It would then told us this was stage 1, and then would move us into stage 2. And as a swing trader, that's really the next best time for us to go long, is when we make a higher high and move from stage 1, from stage 4 to stage 1, from stage to, oh my God, I'm jumping my words here, from stage 1 to stage 2. So obviously it might be a little confusing. That's what I'm looking for. And I will combine that with another signal, which is referred to as, in the CanSlim trading world, as a follow-through day. And that is the first sign that the short-term trend is pivoting. So you could see that we had multiple follow-through days, 2 of which failed throughout the correction of late 2023, that summer. But when you get a follow-through day, you generally will have some kind of momentum that follows in the days that play out following that follow-through day. So it's a great time to go long, and I'll always have exposure when you have a follow-through day. So you could see we had that right when we were breaking out of this stage 1 base here. We had a follow-through day in confluence with the stage 2 breakout on the 195 minute time frame, right? So when you have multiple signals overlapping one another, it basically just increases the odds that there's going to be some sort of follow through. So this was a great swing trade opportunity. Same thing here. Even though they fizzled out, they did lead to multi-day moves, and you could have got a good trade off of that. Also note that each time these follow-through days occurred, we were recapturing the short-term moving averages. So that's just another signal. This actually is not a follow-through day. We had a follow-through day here. You could see this is when we were breaking out of this deeper pullback, recapturing that downtrend line, and also taking control of that short-term moving averages. So you oftentimes see the follow-through day occurring right around the short-term moving averages. You can see right here, we didn't quite get above the 20 moving average, that orange line, but we did take the 10 EMA. But the follow-through days are the first major signal that the bulls are back on their feet and they're trying to take control. Sometimes they'll lead to spectacular moves like this, where you have a 20% move. This led to, I think, like a 6% move, led to a 5% move. This led to very minuscule move, as did this one. This is one that led to, obviously a big move. So we're looking for that follow-through day. And what's important is it's not just us looking for it. It's a whole other batch of traders, CanSlim traders, which is a popular trading strategy, that are also looking for it. So it gives that signal more significance because more traders are going to act on it. And then you also have, our little stage analysis method on the smaller time frames that gives us a buy signal as well. So I don't know if anyone can recall from the group, we were kind of looking for the same thing back in during the previous correction. I used these as buy signals on both. We caught both of these moves. We went long on this stage 2 breakout. We went long on this stage 2 breakout. I missed this break lower. I missed this break lower. But we were using that stage analysis method on the smaller time frames to get a general idea of when to act and when not to act. So I hope that made sense. I know it's a little confusing. Perhaps it's very confusing. If you read the book, which I know many of you did, it's called How to Profit in Bear and Bull Markets by Stan Weinstein. Then you're probably caught on pretty well with this, or followed on pretty well. If you didn't, you should check out that book. I promise it to be of great value to you, especially if you're trying to increase, trying to develop a better skill set for long-term investing and just overall technical analysis. If you have any questions, let me know, and I could elaborate, what exactly. Actually, I didn't even explain what a follow-through day is. A follow-through day, real quick, is when you have a move of 1.25% or more on volume heavier than the day prior for either the QQQ or the S&P 500. So when the volatility occurs, you're going to see in the newsletter, you're going to see me talk about it. We're going to be putting on exposure. And when we have that stage 2 break on the 195 minute, I'll also be sure to point it out in the Discord and the newsletter, just so we can use it as a learning moment. So hopefully this provided a general idea of where we stand right now. Obviously the primary trend is still up. We're in the middle of a normal market correction, counter trend movement of the primary uptrend. And we're just going to be looking for another month or so of chop before a break higher. Doesn't mean it's going to take that long. It could be shorter than that, but statistically the probabilities are quite high that we see at least another month of sideways to downside movement before reigniting higher. The catalyst for that will likely be earnings season. If earnings season is sour, this could be a lot. It would make sense that we could expect this is a longer correction, maybe to the degree of what we saw back here, which was like those 5 or 6 month corrections, because it's going to hinder the sentiment of the market until the next earnings season, which is 3 months out from last week. So big tech going to be really important how they are perceived, their earnings reports next week. And then we have obviously the Fed in about I think 2 or 3 weeks as well, which will also act as a major market catalyst as well. So there's a lot of excitement ahead of us. What we're expecting in the coming days or weeks is just for some sort of bottoming action, and for me specifically, I'm going to be looking for the first. I'm going to be looking to see how we react off of the 30 moving average, see if we build out a pivot that we can then trade off of, just like we can. Obviously, there's going to be a pivot, but just like this and just like this, and that's where I'll really be looking to go long, is when we break into that stage 2 uptrend, which will hopefully come in confluence with a follow-through day. So, yeah, we'll leave it at that. If you guys have any questions, feel free to reach out. Thanks.